Meanwhile, that August 1st deal deadline still about a week away. Sectoral tariffs could be coming down at any time. Let's dive in with Tobin Marcus. He's head of policy and politics at Wolfe Research. And Tobin, I do wonder if this market reaction is telling us something, even as people are tallying up the damage, the effect on corporate America, which is bearing the brunt of this so far. It's almost like the market is willing to look past that. Why?
Yeah, certainly we're not seeing a lot of market reaction to tariffs so far. Certainly at the level of headlines, it's very clear that investors have now been desensitized to tariff headlines. No one is going to panic and sell just on reports about what's going to happen. So I do still think that it's going to be when tariffs show up in economic data, when they show up in margins, that we have the potential for impact. But to your point, even where we're starting to see tariffs really show up materially in margins, it's not necessarily something that's been dragging that much on the market overall. The fact that the sort of tech and AI narrative that's been driving the market higher is not the most tariff exposed piece of the market certainly does help. But even at the level of specific stocks, investors do seem willing to shrug it off. Yeah, and I don't know if it's just a matter of, there's still the sense out there that it's a bit of a ticking time bomb. People are saying, the consumer, just let's not, jump to sort of celebrate too quickly. But usually the market's the first one to try to start and discount that and price it in. And we're at all-time highs. Now, not for everywhere. There's a lot of stocks. GM is a good example of that. Texas Instruments earlier this week, where they are pricing in a much less rosy outcome. But it's hardly a catastrophe. So I don't know what that means for next week when we get the rest of these announcements. Certainly, I think that there are still more shoes to drop. I'm not sure. Ticking time bomb is probably a little more drastic than the imagery that I would draw, but there's a lot of impact still to come. I think a lot of the impact of the tariffs that have already been implemented is still to come, as we've seen kind of tentative decisions by both suppliers and retailers about whether to pass that on because there was not certainty. And then in addition to what's already been implemented, there's still a lot of tariffs still increasing. On August 1st, we're going to see the direction of tariffs keep pointing upwards. These deals are reducing tariffs relative to the threats that were made, but they're still increasing tariffs relative to the prevailing rates that we've seen. We're going from 10% baseline tariffs to probably 15% across the board. 20% seems to be the rough settling point for a lot of these Asian countries that haven't wowed Trump to the extent that Japan did. And then we have the sectoral tariffs coming, where both pharma and semis have very, very large bases. We don't have any details about how those are going to look, but it's a very large category of goods to which those will apply. So, I think we're going to see the impact continuing to build up. Certainly when we speak to sophisticated institutional investors, there's a lot of sort of residual concern. People know this money has not just vanished into thin air. It's going to land either on margins or on prices eventually. Yeah. But there's enough other positive things going on for now that people are looking through.
I really like the way that you phrase the following, and it actually makes these data points all the more relevant that we're talking about in the market for individual names, for the market overall. You say, your theory of what the president wants is the highest tariff levels that markets and the economy can sustain. And it's kind of, I don't know if you saw the FAFO, the acronym that Besant used. I won't go into what exactly it stands for. Maybe we'll call it SAFO. Screw around and find out. But is that effectively what you think is going on here? Is that this is a live discussion where the market's reaction is to some extent telling the president where to land?
Absolutely. If we were seeing a catastrophic sell-off like we saw in early April, I don't think he would push forward with further tariff increases to the extent that I think he will in the context of all-time highs, sort of ebullient animal spirits. This is looking eminently tolerable from a market perspective so far, and I think that is going to encourage them to go further. Not that they're going to just go completely nuts. We're seeing an interest in cutting deals. I think he does prefer deals to unilateral tariff increases in most cases, but again, the deals are going to take tariffs higher. So, we're definitely still in the ramp-up phase, and we'll see exactly what this all settles out to.